chart watchers. It's Greg Schnell, and I am here with the weekly market roundup for March the 16th, 2019. Superbly interesting week. The dollar, after breaking out last week, literally fell a penny and a half, and commodities surged on that news across the board. So that was quite interesting. Just with the breakout, the dollar's got us working very hard to try and figure out a direction, I'll say that. The industrials, we got the shiny side and the not so shiny. We're going to talk about industrials a lot today. And the reason we're going to talk about it, so I went into the transports and checked a lot in there. But there's also some other clues that we have. And there's companies like UTX and Ingersoll Rand, big industrial corps, and I wanted to go see what the chart styles look like on those. And we all know Caterpillar's chart hasn't been great, but Deere was trying to break out months ago. Anyway, we're going to spend some time on the industrials today, and just see what's going on in there, because obviously if Dow Jones, if the original theory, Dow theory of industrials higher and transports higher, or transports lower and industrials lower would be a bear market, we want to be aware of where those are. So that's what I'm going to focus on today. Big review in that area. The oils and precious metals, one day they're up, one day they're down. Oil keeps pushing higher, but the oil stocks just kind of are going sideways. Bonds continued to have a bad week this week. I don't know if it's going to be March Madness, but it's definitely not great. And the reason that I'm so concerned there is the timing of how those bond charts lined up. And I think I laid it out either last week or 2 weeks ago on the 2-year chart. But the bonds are set up here for more trouble, which makes me keep digging to see if there's other areas of the market that are giving us those same clues. So anyway, that's what I'm going to cover off today. And of course, we finished with quadruple witching on Friday. So getting into, first of all, here's the market rally from December 28th. I guess I can go back to December 26th here. And the point I want to make on this is, this is pretty much textbook, where when you're in a bull market phase, this is running up on the growth side, and on the defensive side, they underperform the S&P. And if I flip like this, this is every group's relative absolute performance since December the 26th. And what you'll see, of course, is on the growth side here, it's been pretty good, and the defensives haven't performed as well. As a matter of fact, about half as well as the technology sector. I think one of the big surprises over here is that real estate was the third best performer in that whole area. So anyway, it makes it pretty interesting. Now let's go to the last 5 days. We still see technology having a good push this week. All of the defensive areas had a big push this week. So that's one of the reasons that I'm a little more cautious here. The defensive seem to be doing a lot better than one might otherwise expect. So all of a sudden, defensives are starting to perform well, and while technology still held up, Microsoft broke out to a new high, all that kind of great stuff. I want to be careful, especially with clues like this, industrials down. And I know everybody will say it's Boeing, but it's bigger than Boeing. So anyway, that's what we're going to get into, and hopefully I've teased you enough to get you interested in the industrial sector for the week. So here's the S&P 500. This rally off the low. This is a 60-minute chart, so 1 hour time frame. And then what we see here is the rally, and we came up here and just kind of drifted into the close, which goes back to kind of line up with Wednesday's high, albeit don't get me wrong, the highest close of the week, so that's good. What we're seeing on momentum is slightly lower momentum as we make this high. And this is the chart that bothers me a little bit, is the Russell starting to underperform. This is roughly the 20-period moving average. It's the 100-period moving average on a 60-minute chart. But what you'll see here is we've got this downslope moving average, and the Russell seems stalled underneath it. The Russell was one of the clues that the market was topping back in September. The Russell was breaking down hard, and I'll show you that chart today. So here's the TSX, Toronto Stock Exchange, unchanged on the week. Well, I guess here's Friday, unchanged from Monday morning. Natural gas, nothing going on. Oil, pretty much sideways for the last 3 days here. Gold, wobbling in the middle. So nothing, this is where we closed last Friday. Draw a straight line over. We closed marginally higher. At least it was higher. TLT, so the bonds continued to stay above their 20-day moving average. And here's the big drop in the US dollar for the week. So after pinning a high on Friday, holding in there, Thursday, holding in Friday, it spent the first 3 days going down and then the last 2 days just sideways. But this big move in the dollar was very supportive for the commodity segment. Okay, we also had the Fed meeting coming up on Tuesday, Wednesday, and these lines just illustrate the Fed. I wrote an article for Chart Watchers. And what you'll see on that article is that I talk about 28.23. Well, that was the level that the Fed was at, or the market was at, when Jay Powell took his first FOMC meeting and Yellen retired. So with that, it's just interesting. We're going to come back and revisit that level on another Fed meeting here. So 28.23 is Friday's close. 28.22, sorry, is Friday's close. And we're right back to where we started about a year ago. Okay, US dollar, obviously this was the big drop I was talking about on the dollar. So after briefly touching out to new highs, it literally slammed back to the bottom of the range and is now testing the uptrend line. So quite an interesting reversal. Now I want to get into, this is options expiration, and I mentioned that it's quadruple witching. If you followed my work, you've probably bored of hearing about it. Anyway, here is the huge candle for volume on quadruple witching, and you can see these ones that line up with the blue are all the quadruple witching dates, and on those dates usually you'll see a surge in volume. Now there's some nice work done by Rob Hanna of Quantifiable Edges, and he just mentioned that a week after the quadruple witching, what you find is trying to bet to the long side was a losing trade something like 75% of the time. Anyway, I'm not thinking about a week only. I'm really interested more in the big picture. We will say that quadruple witching marked the top and the bottom, and so now we've come up here and we continue to sit up in this resistance zone. So while we closed at the top of the resistance zone, again, just be aware that we're in a place where we could suffer some volatility. So here's the monthly performance for the S&P. So this is again from the last 20 days. So February 13th to today, up 2.5%. And for the year-to-date performance, continuing to drill into the top right-hand corner, we're at 12.6%. Really nicely done. And this is one of the charts that makes me concerned. So here we're trying to get through this resistance level, and the S&P continues to work to do that. The NASDAQ actually made a nice candle here, higher highs and higher lows, same as the S&P. But it looks like it's actually clearer than on the S&P, and the reason for that is this one over here. And again, the S&P kind of spent, I don't know, maybe I'm just looking at it a little tight here, but the S&P spent 3 or 4 weeks right in this zone here, and we're stuck in there. I think the NASDAQ looks more positive to me, and I'm not sure why. There's something about the chart that makes me think this is better. On the Russell down here, again, we stalled at resistance. We pulled down. We did not make a higher high and a higher low this week. We made a higher low, but we had what we call an inside bar where the low is above last week's low, but the high is below last week's high. Typically, those types of inside bars are associated with indecision, and so just means the market is trying to figure out which way it wants to go. Anyway, so here's an outside bar as an example where, it's trading sideways. We get this tight trade in here, and then all of a sudden it breaks out to the downside, and in this case it was a pretty bearish move, and then dropped all the way into our lows. So we'll just keep watching it, but an inside bar usually just suggests not enough momentum. Here is the S&P big picture, and what we're watching for is we've had a peak in momentum. Now we're coming down and we're trying to rally again, and obviously you can keep going higher. This is all good. You can go sideways, and this will give you a nice big bull market run, or you can actually cap, make a lower high, and fall down here. The reason for us to keep checking our work, and I want to make this clear, is what you're trying to find out as a technician is, do you have enough bull market strength to keep running? And we had lots of breadth off the lows, so that I agree with. The problem I have is most of the world seems weaker than normal, and with that weakness, I think Germany's growth got downgraded this week. Japan's growth got downgraded, and they're never going to project a negative number for a target. They're always going to project some sort of a positive outcome and then come up short in reality. But having those both downgraded to roughly 0.5% GDP growth for the year seemed, I think it was 0.6 actually. So it seems too weak to me when you consider that Germany is really the economic engine for Europe. And the French chart actually looks better. Even with all of the yellow vest protests going on, that chart looks better than the German chart right now. Anyway, that's the concern, is if we were going to make a top, so this is our left shoulder, our head, and our right shoulder, and as you get up towards the left shoulder, you want to kind of just check your work and make sure that the market has enough breadth. I'm continuing to watch it closely. Maybe I'm too cautious, but I think there's bigger issues out there. NASDAQ composite, so here we go. We didn't have any distribution days this week. And again, a distribution day is when you have a higher volume on a down day. And so what happens is if they're selling into the rally, so in this case you had 1 here, 2, this one down here is 3, and then 4. And again, you probably want it to be on a bigger market move than just a marginally lower down day. But just to start with, just count the volume days that are starting to break down, and that'll give you an idea. If we go back to September in here and just take a look, what you start to see is we had 1, 2, 3, 4 in here, 5 in here. Here's 6, which was quadruple witching. Hard to see this one, but I'd say no. And then 7, 8, 9, 10. So you're starting to get a lot of high volume selling days. And again, the market was breaking down. So that's kind of one of the clues that William O'Neill uses. And just zooming in here, you can get a better feel now for those quadruple witching. So early September, 2 of them, and then here's one here, 3, 4, 5. This one I think is probably a little higher anyway, close enough. 5, 6, 7, 8, 9, and you're really starting to break down. So roughly once a week you can have a distribution day, but you don't want them to start clustering. Last week they started to cluster with 3 of them, and then this week none of them. We're still on watch. Okay. So the other thing to be careful of is momentum right near 0, and that's kind of where we're at. So it's another reason why I keep checking my work. Looking at the New York composite, so this is all of the stocks on the New York Stock Exchange added together. What you see here is lower highs and lower lows on a monthly basis. And so far this month up slightly, but momentum is still declining until this can reverse into a positive trend. That's what we're looking for. This is a close-up view, and you can see so far we haven't taken out the February highs or the February lows inside bar on a monthly chart. We had that back here in October, and then November and December were the big down months. So actually, this is December, November, October. So it was November that was an inside month. Anyway, it's something to watch. We're still in an inside month right now. Looking at the Russell again, here's our 40-week moving average, and you can see we're stuck right at the top. This is the part of the chart I don't like, and I mentioned it March 1. Watch to see if the Russell starts underperforming, and this trend line goes back a couple of years. So we briefly dipped below it. Now the Russell was outperforming for the rally, and now the Russell keeps underperforming. So that's a concern for me. And from a momentum perspective, if the Russell's going to roll over below zero, that's exactly how a bear market would start. So if you just unwind the tape, what we don't want to see is this sort of thing where the Russell keeps rolling over under zero. And again, in this rally here in 2011, we had a brief dip and then it took off to the upside. Here's one in 2015 where it rolled over below zero. So we're just watching because the situation is a setup. And if we ignore our weekly charts, that would be the kind of issues that we're specifically watching for. So at this point, we've got a lower high. We're struggling around the 40-week moving average. If you look here in 2015, same sort of drill. If you look back in 2016, same point, where we got up, couldn't continue to go higher, then failed right here around, I'll call it end of year, dropped down in, tried to rally out, couldn't get going again above zero, and the market rolled over. So it's just a good place to be cautious about the bigger picture. And when we get into the transports, I think you'll agree. So I'm not going to spend too much time on this. Here's the Toronto Stock Exchange. And what we see here is this is rolling over on a daily basis, on a weekly basis, same sort of issue where the momentum is just kind of right at zero and watching closely. So again, we dip below zero, rally back up, and you want to make sure you've got enough breadth to get going. And what we see here is the histogram is starting to slow, just suggesting that things are getting weak. Now, if you go look in June, July timeframe, the histogram was starting to get weak, and here's the July high, roughly first week of July, and that was when the histogram started to go lower. So now that we're starting to get lower histograms, it's at least time to pay attention to that kind of stuff. Okay. Why can't I get this to shrink? There we go. Okay. I want to get straight into the US dollar because I want to get time for this industrials review. What we see here is this triple topping action, and I had this rolled over last week, opened it so it was still up because it was breaking out to new highs. And then sure enough, what does it do? It rolls right over. So now again, we're getting near this trend line, and I'm going to show you that on the next chart. On the next few charts, I guess. So we were starting to break through on Pring's Special K, so that was something to be aware of. But look at this lower highs on momentum here, and all of a sudden it looks like it wants to break down again. Big move from 97.60 to 96.05, a penny and a half in a week. Quite a sharp pullback. And then this is the US dollar. One of the things we were watching for, so we saw a breakout in momentum, and sure enough, what does it do? It rolls right back over. I'm just going to grab the UUP chart here, and what you'll see on this UUP is now we're starting to test this momentum trend line the other way. Looks like it wants to break down, and we've got this big uptrend in price here that's trying to hold, but we also have, just going back to this other line chart, we also have this uptrend right here trying to hold. So it's pretty tricky in here to figure out the way the dollar can go. And again, we have washed back and forth for 6 months. Every time we started to get bearish because it was rolling over, it would do the opposite. So at this point, I think it's just a wait and see. But commodities rallied on the back of that. Wasn't any real big moves in currencies I didn't see. Here's the British pound. That was one of the ones that made an outside bar this week, and that was made a lower low and a higher high. That's bullish when it does that. So it tests the low, actually breaks down below, and then shoots up, and not only closes not within the bar, but actually closes at new high. And in this particular case took out like 4 weeks of price action. So that's pretty bullish. So we'd expect maybe we come back up and test this 137 level. I don't have a feel for it yet, but maybe it's the fact that the Brexit deal isn't getting concluded, so people are optimistic there. We'll just briefly look at the Japanese yen, and the reason is because it didn't go anywhere. It had an inside week. So continue to watch. To me, it looked like this was going to roll over and fall down. Now, perhaps it's ready to shoot up. I just don't have an answer. Again, the dollar is kind of the other anchor point. Euro, just to highlight it, stayed right inside this narrow trading range after breaking down last week. And so, finished the week much like the opposite of the US dollar. This trend line isn't in play yet, but probably later this week will be. Canadian dollar, just for those watching, just stuck down here, didn't really have a great week, and even though commodities did, so that's a bit of a concern. Okay, let's get into the bonds because I mentioned them the other day, or in the opening comments there. What you see here is we've broken this downtrend, and if risk appetite is rising, so is this chart. So this is turning up, and last week it looked like it was rolling over with a PPO below zero, so that was a bit concerning. This week, sure enough, it turns around and just spikes back higher. I will say that breaking that trend line is positive news. That's the same kind of thing that happened in 2016. We had a big downtrend, and the break of the trend line was good news, and that kind of set the stage for a bigger rally. So that looks pretty good, right? Well, here's the 10-year, and what we see on the 7 to 10-year Treasury bond ETF. So this is price rising, yield falling. So people are buying usually for safety. Anyway, so what we see here is this rally takes place, and we're still below. This is the unadjusted, so we haven't added back in the yields you get. But there's a horizontal level here. I'll call it at 105, 106, and we just keep oscillating across that. The question I have is this ready to break out in momentum to new higher highs? And when that started to do that, you can see in 2014, that was really when the market volatility started. So it started in September timeframe. Market actually topped over here in May, and then notice this was positive for the whole period. And then as all of a sudden late 2016 or mid 2016, this rolled over right on cue. So anyway, we're above zero, watching closely, but if this is going to start to break out to higher highs, that's a question mark for me. The corporate bonds, again, they rallied as well this week and are pushing above this downsloping trend line that's been going on for 2 years. So people are continuing to buy bonds, which I think is one of the key messages I want to share today. Here's the 2-year, and this was a chart from a couple of weeks ago. I'm not going to spend a whole bunch of time on it, but when the 2-year rolls over in a significant time frame, 2006-7, this is at least a place to be aware of. The inflation protected chart is starting to break out, and this is really interesting. See what's going on there. So somebody's expecting some inflation. I haven't seen it. Looking at the TLT, this is unadjusted. What that means is no yield, or the dividend payment is taken away, so it's just raw price. Otherwise, we'd correct the chart for the total return. In this case, this 122 level, pretty solid. Watching to see which way this chart wants to go. The BlackRock Muni Fund, I continue to watch it to see what is it telling me about my 10-year. And what we're looking for is this continues to make higher highs and higher lows. So far, last week it pulled down a little bit, but it's breaking this big long trend line on the PPO, which I find quite interesting. And the full stochastic starting to advance above 50. Normally that's quite bullish. There was a lot of low volume in here, so I thought this might roll over. Obviously, the chart isn't rolling over yet, so we'll keep watching. On the monthly, what's going on here, if you can see over here in the Zoom panel, last month we had an inside bar, and this month we're now making lower lows. So we had an inside bar, now an outside bar, and we tested the prior high. We tried, failed. Not only did we not hold there, we went all the way to the bottom of the range. This chart to me suggests quite a bit of bearishness, especially with the height of the move on the PPO. So even if it came down to zero and then started to rally from there, that would be fine. The only thing I would say, it was just so again, this is the yield, so oversold on price, and then it rallies extensively on price. So watching it very closely. Now we're going to zoom in on the next chart. What we see here is this close this week was terribly low. I'm having trouble. There we go. Was very, very low. And you can see last week we had a low close. This week a lower close. This is the interim spike down during the final market low. But the point would be, if you use a line chart, obviously we're making lower lows and closing down here, and I'll show you that in a second. But there is no change in trend here. We don't have any positive divergence setting up, anything like that. So that makes it much more difficult to believe we're ready for a higher high. The 5-year, this chart just keeps breaking down. This is not a good sign at all, and rolling over below zero. So not comfortable with the message starting to come out of that market. This 2-year chart, this red line and this blue line have the same slope. This was 2007, early in the year, and when the 2-year topped, that was kind of a big deal. Well, now we've got this 2-year topping action rolling over right at zero here in terms of the momentum. You can see this big decline here. So all through 2018, the 2-year was losing its momentum, and now it looks like it's ready to break down through here. If you'll notice, in 2016 it topped out, well, pretty much at the market lows actually, but going over into different parts of the market, 2011, when we had the financial European financial issues around Portugal and Greece, that kind of thing, this rolled over pretty hard, so it was also a clue for us then. 2007, pretty big clue. So that's what I'm watching for. And you can see as this starts to break down, you want to be more careful. It just gives us some clues that something else might be fracturing. Let's look at the spread chart, and there's a reason to specify the spread. Again, we want the 10-year and the 2-year to be far apart. Well, they're both dropping at the same rate here, so that's not a big deal. But the fact is that the 2, 3, and 5-year are all below the 1-year, and now it looks like the 10-year wants to get below the 1-year. So as they keep approaching each other, that is a problem. And you can see all of these are starting to make lower lows again. So not a lot of comfort there. And after the 30-year broke out around the 1st of March, now it just keeps wobbling. And you know, I was kind of hoping this higher low was, we had a higher high and a higher low. This would be good. Well, we'll just watch next week, because that's a pretty important one for the 30-year. Okay, let's get into the transports quickly. So one of the concerns I see here is this lower high on the transports back in September to October. And now here in February, we had a much higher high. We come up and now we're struggling. Now, I agree, Boeing is the big issue. We're gonna dissect that and get into the individual groups. So here's the airlines, first of all. And again, just sideways action for a couple of years. No money to be made in that chart. Here's the railroads. Oh, well, unless you're a swing trader. Looking at the railroads, so far we've topped out at the prior highs back in October. Haven't been able to get through. And one of the things I'm watching for, so the momentum has been declining. And again, if this relative strength trend in the railway breaks, so the railways usually outperform the S&P 500, if this starts to break down, that's a bigger clue for me, and I'd want to be much more cautious. So that's why I'm watching, why I've got this watching closely. We're double topping here. Will we be able to hold up in relative strength? So here's trucking, and the one thing that has happened on trucking back in September, it made its high early in the month and rolled over around the end of the month again, and on that rollover failed to hold its breakout. Pretty important stuff. Technically, it started to make new lows, went down here, rallied, tried to rally, and this trend line broke kind of end of October. We've now just broken this trend line here in March, can't get the rally going again. We're making lower highs in relative strength, lower highs in price, briefly broke above the 200-day moving average and this prior resistance level, and now we failed and we got up here and it looks like we're rolling over. Again, this is trucking, not Boeing, and so it was one of the reasons that made me do a deep dive on the industrials today. But if this is going to roll over down here at zero, be very, very cautious. And then the other side of it would be obviously if we break down below this support level that was for 2018 for most of the year. I think if we start falling much below the 780 level, that's a pretty good clue that the market doesn't have the internal strength. Here's the autos, and this chart just keeps rolling over. There was a nice little uptrend going, and again, a rollover around zero is very cautionary. We failed at the 40-week moving average. It looks so obvious in hindsight, but you keep working the charts every week, and all of a sudden these things are starting to appear again. So a momentum rollover below zero. We had one back here. We had a little one here in November, December. Same thing here. The chart just keeps working its way lower. And again, this December low was the same, slightly higher than the October low, gave us some room for optimism, but literally after 2 weeks up, these things haven't done anything. So continue to watch that, and obviously Tesla is one of the wild cards in there. Utilities broke out to a new high this week, so that was bullish. And it just keeps going, so nothing wrong with that. Going back and looking at the utilities chart, you can't really tell, this is a big uptrend, same as the stock market, from the 09 lows, but this hasn't moved up as quick. This is the utilities this is the TLT chart. And again, what bond yields do, just watching to see if utilities are behaving the same. The only thing I will notice on this chart is when you have these sudden volume surges, that tended to be pretty good clues for, more price action, more cautious approach to the equity markets. Other than that, just because the utility market's hitting a new high doesn't mean it's bearish. But I will say momentum is starting to improve and break a 2-year downtrend on momentum, which would add I'd be more cautious on the overall equities on the fact that utilities are starting to gain momentum here. So here's the industrial sector spider ETF. And again, Boeing had a bad week this week, not last week. Boeing fell 10% this week. So with this big pullback last week and then this week, Boeing kind of offset the rally. And Boeing is by far the largest market cap in the whole industrial sector. So when we see this big move by Boeing, it would suggest that, maybe it's just Boeing that's rolling this chart over. But actually, Boeing held this chart from bouncing back up this week. And it's that kind of thing that I'm more interested in. So as this chart rolled over pretty right near zero, this is a concern. And you can see that we had the same thing going on back here in September, October. And while this was rising, nobody wanted to show any fear here. We were testing a double top, and sure enough, this uptrend got broke and down we went. So now we've got this uptrend breaking, and the question is it down we go? So I don't have an answer for that, but I do think we want to be very, very cautious with that sort of backdrop. Okay, I want to get into the industrials. That's over here on my other tabs, but let's just finish going through the commodities briefly, and then we'll jump into the industrial review. So the CRB so far this month is making a higher low and a lower high and testing trying to break out. And again, it had a pretty good week just on the back of the US dollar dropping this week. On the month, US dollar's pretty much flat. So that's more of a concern. Here's the weekly chart. And what you see here is we were in the middle, there's this dotted line, and this dotted line is the 20-week moving average. So we were struggling there, looking like we were going to roll over, and now we've started to rally through it. The break of this downward momentum trend line is extremely bullish for me, so I'm really struggling to try and be bearish when this is the kind of breakout I want to see. And even if we go back and look over here, here's the 2017 lows in commodities. And as we started to rally and got through this downtrend, I mean, that was a great place to get on board and enjoy the uptrend ride. So I, in particular, think this is a good sign. I think the real question I have here is, is the US dollar the clue for us? If the dollar goes lower, I think we could still rally, but the dollar's been a headwind for the S&P 500. So a little bit of concern about that. Looking at the DBC, the Commodity Tracking Fund, it doesn't look anywhere near as bullish as the bar chart on the last weekly chart. So this seems to me to be pausing, and again, so far it's made a lower high compared to the February high, and again, that's what we're continuing to watch for. So wanting to see it break out, haven't seen that yet. Here's oil, put on another higher high, closed up above $58, very bullish. Natural gas rolled over. Heating oil, these two just moved opposite this week. So gasoline soared and heating oil pulled back a little. Both of them are still above their 10-week moving average. Corn, soybean, and wheat all rallied, I think, on a lower US dollar. Gold and silver, gold was up again slightly on the week. Silver was pretty much sideways to down. Let's just say no action, because they really didn't make any moves this week. But obviously the big question is they're back below their 10-week moving averages. And so caution is still warranted for sure. Here's copper. And copper tried to rally, a couple of pennies on the week. That's nothing to sneeze at, but at the same point, we're right at this resistance level of 295, so we want to be careful. And aluminum didn't rally at all, it just stayed sideways. Livestock had a banner week, off to the moon, and broke this big downtrend line that goes back a little ways here, so we can just open up this chart. What you see is this nice big push through, so that's a bullish piece of news. And sugar and coffee, both below their 10-week moving average, but one rallied, one didn't. Cotton looks better this week as it's trying to break this downtrend line, so that's interesting. We're not seeing the same thing in cocoa, continues to drift below its 10-week. Medical marijuana surprised me this week and actually pushed higher. And what we see here is the down-sloping trend line breaking. So I was starting to get negative. Well, I am negative on the marijuana sector. This starts to add caution to my negativity. The reason I was getting negative was this upsloping trend line in relative strength was starting to crack. This week it turned up a little bit higher. 1 week doesn't make a trend, but I'd be, I was starting to notice this weakness on the SCTR ranking, and sure enough, it rallied a little bit this week. So I would still stay cautious on the sector, but there's obviously some money moving in. Aurora Cannabis had a good week. Coal bouncing up against its 10-week moving average. Steel trying to bounce off its 10-week, but still below resistance. So both of those are, again, almost all of the commodities rallied this week a little bit with the weaker US dollar. So here's rare earth metals trying to make a higher low here, and lithium was actually below its moving average still this week, but again trying to rally a little bit. Okay, without getting into too much stuff, let's just quickly go through energy, crack and frack. And what we see here is the XLE is kind of torn right at this support resistance level, worth watching. It's rolling over in momentum, starting to make lower lows and lower highs. That's a big deal for me, and we could just clean up this chart a little bit and save it with a lot less days on there. Let me do that. So continuing to watch this level, again, much like the S&P 500 trying to get through prior highs, and so far, energy just hasn't quite been able to get it going. Here's crack, the oil refiners. They had a nice week, actually, a little bit higher highs and higher lows, so that was positive. PPO is sloping up, but still below zero. No real interest showing up to buy this, and the full stochastic looks like it wants to roll over, and the scooter ranking says not much going on here at this point. Frac, which is the unconventional oil producers, this one is pulling down harder, and so it's making an inside week, but again, still holding below its 10-week. The PPO is very weak, hanging out down here, and the full stochastic is still trying to go up. A rollover in here would be considerably bearish. Okay, that's just a daily. So here's the crude oil, $58 this week. So that was a nice little push. Unfortunately, again, we didn't see a whole bunch of response from the oil stocks. Crude yearly, still in the main trading range for last year. No real break there. And then XOP, the exploration and production, what we see here is it continues to drift and stay below its 10-week moving average or 50-day moving average. And the problem I have with that, if the oil stocks aren't outperforming oil, it kind of says they don't believe in the move. And that is what worrying me. So this little pullback on Friday didn't give me any comfort. And we can see that oil traded, made an outside day with a higher high and a lower low, but closed near the top of the range. So still an okay candle. I would not like to see it break below $58. That would probably confirm to me that this was going to roll over. Let's just quickly look at uranium. This chart looks like it's getting right up to the top of the range here. No real volume showing up. These are mostly utility stocks in here. URA is trying to push back above its 200-day moving average, and a big component of that would be Cameco. Watched this trade for so long, and it just doesn't seem to want to go anywhere. I think just when you quit watching, it'll finally have a good week. But we still don't have we've broken the downtrend line. We still don't have a PPO moving above zero, and that would be helpful. But this week it did get back above its 10-week and 40-week moving average. Full stochastic looks like it wants to turn up above 50 for the first time in a while. That usually is bullish. Copper weekly just stalled here right at the horizontal resistance level. Let's go down into gold. What we see on the gold chart, again, this rollover, so 3 weeks tight, really within pennies of each other. Nothing major, but we are losing momentum here, so that's a bit of a concern. And we have a downslope in relative strength here. As long as that continues, we're probably not going higher. Looking at gold on a daily basis, obviously we had an inside day on Friday, but chop for the last couple of weeks, no real movement. The only positive sort of tilt we might have here is that it looks like momentum is starting to base and turn up here. That would be worth watching. Again, closing around this $1,300 level, that continues to be support and friction. Getting back above it would be great. And this is the downtrend we can see for 2 months here. Relative strength for gold. Again, the underperformance on the right-hand side here doesn't warm my heart. But a lot of that had to do with the dollar move higher. Okay, so gold now, just again, we're below the 10-week moving average. That's usually cautionary. You can see all the way from October, November, December, we'd been moving up above it, and now we're kind of sitting below it. On a weekly chart, if this is going to roll over, this is more important to me than the potential move on the daily. Once the weekly chart starts to roll over, I'm much more concerned. And again, you can just see gold in general, the momentum all the way through this downtrend hasn't gotten much better than this, and then it rolls over again. The gold stocks compared to gold, this is a downtrend going on for 2 years. They've generally underperformed, and we're still stalled right here at this line. A break above this would make me much more bullish, and I haven't got that yet, so I have to continue to be, I don't know if the right word is disappointed, but I have to continue to monitor that. This silver line, I haven't moved it yet. I keep thinking I should just gently nudge it up. But the problem is we're sitting right in this range. And again, pretty much the whole year we've consolidated within a few percentage points. So I don't really have a reason to kind of push it one way or the other. I do want to show the lumber chart for one. And then again, just kind of trading in here, we're just below zero. So if this was to roll over here, that wouldn't be a big surprise. And I don't want to go through all of the car companies, but Tesla is the biggest one. They just announced their whatever model, another car. And that's not to diss the other car. It's just that I can't remember if it was the Model Y or whatever. But this 279 was the prior low. Last week we broke below it and then closed back above it. This week we tested a little higher, made an inside week, but actually closed on the lows. I'm expecting Tesla to go lower. And again, failed just at the zero level. This is not a good place for momentum to fail. I know there's a lot of Tesla fans out there. There's a horizontal support level now. Let's just pick 260. There's some 247, 250, whatever. Down in this area between 240 and 260, there's a lot of buyers that are Tesla fanboys. And so as long as those buyers are there, this is going to be a tough chart to short. Many reasons for people who are short and long. I'll stay out of that debate this week. Let's jump into the not utilities, the industrials. And what I want to cover off here, so first of all, what I did was I went and I just ran a scan, and aerospace, commercial vehicles, trucks, defense, industrial machinery, waste disposal, and industrial suppliers. And just a footnote, the waste disposal services charts look really good. But taking these other ones as a group, and maybe I could have left commercial vehicles, trucks out of it, but what I wanted to try and show, I've got the UTX chart sitting here, and just UTX has a very high correlation with the S&P 500, hugely correlated. It's in the Dow Industrials, all that kind of stuff. When it can't get it back above its 40-week moving average, that's a problem. And you can see down here it might dip for a week and then it rallies. So here we spent some time jogging across it, fell down into the lows, rallied back up, and now we're right here. And this week, last week we went below it, this week we went above it, and maybe this is its rally point. I don't have an answer for that. What I will say is this is a very broad, diverse industrial, and it is a good representative sample of what we want. But while the stock market has been going higher for the last 4 weeks, what do you see on this chart? And what I see is a lower high, a lower low, a lower high, a lower low, similar high, and a lower low. So these last 3 or 4 weeks have not been bullish, and that's again without looking at Boeing in there, which obviously had a bad week. So the order for this chart list is in market cap order. And when we look, one of the interesting charts is this Airbus. It's actually breaking out to new highs as Boeing falls. So that's an interesting correlation switch. And then one of the other ones that was doing really well was CAE, which is my understanding is they make the aircraft simulation for pilot training, and a lot of people might be suggesting there's more pilot training to come with the software on the Boeing jets. So anyway, that was an interesting chart change. But here's Lockheed Martin. Well, actually, let's just jump into these. So again, these are market cap order and not best performer order. But the point I want to make on these, obviously Boeing's a beautiful chart. You've got a back order of 300 and some billion or something. Here's UTX. And again, this is the chart I just showed you on a weekly. But here's the last 3-4 weeks performance, and it doesn't come across as that bullish to me. And again, your momentum rolling over. Now it could start to turn higher here, and I would get excited about that. My point is it's rolling over with the transports, and it's not a it's not a transport, it's elevators, it's door hardware, a whole bunch of good stuff. Air conditioning systems, they make Carrier. So here's Airbus, and this is the one breaking out to new highs. So again, I don't want to focus too much on the aerospace side of this. Here's Lockheed Martin, made a high back in January with the overall stock market, made a high in September, and now failing at the 40-week move or the 200-day moving average and rolling over. Huge volume on options expiration. It just makes me want to be very cautious. Here's Caterpillar. This chart does not look like an uptrend to me. Here's John Deere, and this one's really interesting because I did an article probably right here in December when it made this breakout, and then it pulled back down and rallied up, and it has not been able to get much above this 158 level. So if I just was to put a horizontal line going across there, we just keep stalling here. And I think if any further breakdown, look at the scooter ranking is starting to fail as one of the top performers. So not comforted at all, and this is going below zero in momentum, so that's weak. Here's Raytheon Defense. Usually defense is quite a fertile industry for new capital, and as you can see, lower highs and lower lows coming in here and failing at the 200-day. Here's General Dynamics, same issue. Here's Illinois Tool Works. Again, these are sorted by market cap. So falling down here, at least it's above its 200-day, but it still hasn't been able to take out February's high. And look at the volume showing up on options expiration. July was an options expiration. Well, this might have been earnings, actually, because it should have been June for options expiration. But this is one of the highest volumes on the chart. Anyway, a little bit concerning. Northrop Grumman, a lot of aluminum stuff. They make trucks, planes. General chart shape, horrific. Waste management, again, really a bullish push here, up almost 10% in the last couple of months. And ABB Engineering falling. Fanuc, I don't even know what this company does. It's listed on the OTC, so it's a foreign company. Didn't have time to research it, but again, that's not a chart shape I want to buy just yet. Ingersoll Rand, they make the refrigeration unit called Thermo King. They've got a whole bunch of other compressor companies. They have different hardware. They're a lot like UTX. They don't have an elevator division, but they have a lot of varied industrial stuff. Again, nothing wrong with the chart here. This one is probably one of the better ones. Just the fact that it keeps trying to take out this high is bullish. I just don't want it to not take out this high. So this one's on my watch list. And again, it hasn't been able to get through the February high yet. And yet is could be a day away. But even on options expiration with a lot of attention, it didn't go anywhere. And if that was an opportunity, Microsoft took the opportunity and broke out. This one could not. Republic Services, Cummins, this is truck engines, obviously. And what we see here is it's been trying to break through this 155 level. Hit in early December, has just struggled to do anything. Huge volume on Friday. Again, options expiration will do that to you. But my point would be, can we get any sort of momentum out of this? And this one really needs to get going. Here's PACCAR. They make Kenworth and Peterbilt. And anyway, that to me is same issue, just can't get going yet. Much similar to the S&P 500. Here was the market top for the S&P. Here was a market top for the S&P. And now this lower high is what's got me concerned. TransDigm, these guys are in the aerospace, but you can see breaking out really a nice run up here. Komatsu, industrial heavy equipment, below its 200-day and declining. Here's Rolls-Royce, and I wondered if they might show up under, airplane engines or whatever, but, that chart's just sideways with the exception of an August high. No real data in there for us. Waste management, or another waste one here, doing well. Parker Hannifin, this chart just seems to be stuck at 180. Rockwell Automation, same drill, can't get through. BAE Systems, breaking lower. not a chart shape I like. There's some positive divergence here. That's about the only good news. Fastenal, this chart broke out early February, and it really is jogged sideways, but so far a lower high from the February high, so it just makes it on the watch list. Kubota, nothing really positive there. Granger, pretty much everywhere, but this chart is sideways and hasn't been able to do anything since mid-February. LLL, L3 Technologies, this is trying to break through 215. So far it's stalled. CNH downhill with the 200-day moving average. Xylem, same sort of head and shoulders topping structure with lower lows. That one's a bit concerning right there. Dover Elevator broke out mid-February, hasn't been able to rally with the overall market. Scooter ranking starting to fail. Textron, gap down here, gapped up back in January, but rolled over, really hasn't made any progress since. So investors are having trouble finding something to smile about there. Heiko is trying to break through prior highs, which is bullish, by the way. But this IEX, this looks set up to me. We'll just keep watching to see how this right side behaves. Spirit Aero Systems, again, don't want to really focus on Aero as a market direction, but here's Huntington Ingalls. Again, we're getting into the smaller caps here, but you can start to see lower highs coming in. This Graco just sideways, HD Supply Holdings. So again, I continue to watch to see if we can break through, and one of the concerns I have is this sort of thing on a lot of these industrial charts where the last 3 weeks it's been performing. The uptrend that the overall market has been having is starting to slide, and you can see these relative strength and scooter rankings starting to slip down here a little bit. Tata Motors on decline. Nordson, again, lower highs, lower high, lower high. This has been pulling back for 3 to 4 weeks. Pentair, same thing, 200-day moving average stuff. Nice breakout here on Toro. Must have been a great sale on lawnmowers or something. This thing moved up dramatically. Wabtec really pulling down hard. Don't know what Donaldson does. Woodward Governor, breakout and rallied up, but again, the last 3 weeks just kind of consolidating to down. And CAE, this one is breaking out to new highs, and that's what I mentioned. It might be the training systems for flight causing that surge. Flowserve, this is a popular one to trade because it's had pretty big moves, but the real problem is it's stuck at its 200-day and it's sideways and it's not going anywhere. Okay, Allison Transmission, another big one, obviously, and what we see here is trying to stay above its 200-day, but clearly a double top try here and 3 weeks going lower. Gardner Denver, air compressor, rental, blah, blah. This is starting to fail. Lincoln Electric, same thing. Oshkosh rolling over after breaking out, concerning. So I don't know if you see the same things I see, but my problem is I'm not, the rally that all of these stocks were in seems to have stalled. Maybe it can restart, but it's been 3 weeks of not restarting. So it starts to make me wonder. Crane, bathroom stuff. So that chart just keeps going lower, failing at the 200. Curtiss-Wright, lower highs, lower lows. Anyway, I think that's enough of that. Let's get back to my PowerPoint, and the point I want to make here is the dollar smacked down, pushed the commodities higher. Industrials, they don't look great, and I went through the transports with you as well. Trucking is that rolling over chart. Continue to be cautious with oil and the precious metals, and that's mostly on the back of the gold issue, or of the dollar issue. And then bonds, what's it trying to tell us when they're making these new lows in yield? Thanks, everybody. Have a good week. Bye-bye.